Hi everybody, Howard Friend, HF Systems here. Just looking at the markets, bit of a follow-up from yesterday. Starting off with euro dollar, we are still stuck in this consolidation mode, having seen the rally extend up to the swing high of 107.486 a couple of days ago. So I've been talking about support coming in at 106.42 with a lower end of 106.072. Looking for the pullback to base in or slightly above that region. Yesterday's low was 106.42, funnily enough. Not seeing too much in the way of downside from current levels. Prior to breaking up through 107.486 for a push into the 108 plus area. Should we fall back through 106.072/42, then that for me would suggest that we've seen an important high, although 104.59 is really still seen as the key to a resumption of the previous major downtrend. Moving on to cable. Cable, I was looking for this pullback, the previous correction from just above 106 to base out above inside day support at 124.379. A couple of days ago, the market based out at 124.716, so not a million miles away above that level, and we're subsequently broken through the swing high early this morning. Not seeing a whole lot in the way of follow through, so maybe a little bit of sterling weakness coming through. But as long as we continue to hold above this 124.716, retaining a positive outlook, looking for an extension up to that reaction high at 126.382 and possibly a little bit higher, 127 the figure, but we'll see how things develop here. Should we fall back through 124.716, that would confirm at least a minor top and a bit of a deeper setback. Although 123.297 remains key for a resumption of the previous downtrend. On to dollar yen, a bit more action on this one today. As with a couple of days ago where we saw a little push higher early in the session, which failed, and it was followed by breaking through the previous session's low to form an outside day, we've seen the same pattern today. So the trend is still down. We broke through the top of yesterday's session high, making a marginal new high at 127.582, and we've subsequently broken through yesterday's low, forming an outside session. Now, as the trend is down, I'm favoring the downside, a bearish outside session, looking for an attack on the swing low at 126.362, loss of which could well see 125.68 tested, which is a bit of a projection target. On the upside, again, should we get back through that 127.582, that would flip things around, suggesting that today is actually a bullish outside day, and that would confirm a bit of a low. And then the focus would then be back on the, first of all, the falling 20-day moving average, which comes in just below 129, and then the reaction high, which is 129.781, which really is the key for a resumption of the previous uptrend. Onto gold. Gold, yesterday I was a little bit concerned that yes, we did make a break higher the previous session, but it was struggling. So I was a little bit wary that we could see a deeper setback, and that's really what we've done. But for me, the structure is still quite positive because we've got a series of higher highs and higher lows developing. And as long as we're above the previous swing high, the break point, 1836.17, long as we can hold above that level, then the uptrend from the 1786.82 swing low, trend low, is still intact for me. So looking for basing out, breach of 1869.73 to throw up some targets above the 1900 area. We've got some couple of moving averages that come in above the swing high. So once we get the break to the upside, we can nail down some of the targets. On the way down, should we settle back below 1836.17, that puts pressure on 1807.08, the reaction low, the key for a resumption of the previous major downtrend. Onto crude. Crude, yesterday I was talking about the formation of a higher low at 107.99 a couple of days back. So that for me looks like we've seen the end of the 103 111.30 swing correction at 107.99. So all that remains for me is breaking up through 111.30 to signal a resumption of this move, an attack on 113.27, the swing high up here, for a push well into the mid 114s. In the meantime, should we break through 107.99, that would confirm a bit of a top and bull failure. So we're back into the range. But 103 is still seen as the key to a bearish trend change. Onto the S&P. S&P, quite exciting, that one, because I've been looking for a base close to around the previous swing low at 38.59.85 from the 12th of May. 2 days back, we based at 38.75 and saw a big, a long lower shadow, nice rejection, bit of buying pressure there. Yesterday we followed through, we broke through the recovery high, which came in at 398.515. So it looks to be quite constructive, for me. Next target, we've got the falling 20-day moving average. That comes in at 403.1. And then the key level for me is still this 409.810. The reaction high, the last reaction high within the previous bear market. We get back above there, then we'll be talking about a double bottom situation and then much higher levels. On the downside, should we fall back through yesterday's low at 39.1760, that would kind of neutralize things a little bit. But to become bearish again, I would need to see it back through the 3875 reaction low. That would confirm ABC up from the low, and then we're looking at another push through the swing low at 38.1075 in a resumption of the bear trend. Finally, Bitcoin, still not a whole lot changing there, stuck in the middle with you. Not a lot to say, really. We're kind of hovering around the 30,000 level, looking really for break below 28,324 or break above 3724 to really give some directional bias for this one. So until that happens, not a lot to get excited about. I've got a kind of a, in line with the S&P, a bit of a bullish basing scenario, which sees 25,330 as a major low. But again, as I said yesterday, I need to see it breaking through some of these resistances to give me a bit more confidence in that. Should we fall back through 28,324, close below it, then that would again expose the swing low. So that would look quite negative. Okay, thanks very much for watching, and more tomorrow.